G'day everyone, welcome back to Pete's Investing. Today's March 27, 2023. This is the spot silver price update. Here we have the daily chart, the 4-hour chart and the hourly chart. And just one thing to highlight is at the bottom here I've got the CCI 1500 with the moving average 400 for each of these charts, and that's showing a bullish momentum on all three timelines. So at the moment, predominantly take long trades. So I'll drill down on each of these, just give you an idea of where we are for each of these. First of all, there is this key resistance area up here at 24.63 and also a key support area at 19.91. But there's also this minor resistance being formed as we speak at 23.52, and that's to be playing out in the next couple of days. We should confirm that if that works out. Otherwise, we'll move that red line down to this dotted line once that confirms. Otherwise, you'll notice here there's a Fibonacci retracement, and the price did hit this 78% level, which is also aligned with this key resistance forming. One thing to notice as well, if you're new to the channel, we always follow the CCI 1500. If it breaks to the upside, it's a sign of a positive move, as opposed to the moving average 200 on the price chart. So for example, back here, it told you to get into the trade very similar. They similarly align most of the time. They similarly get into the trade there, as you can see there on the price chart as well. But notice over here, it gave you an early signal to exit the trade or exit long positions, whereas the moving average continued, and the price continued up above the moving average in the months after that. There could have been some trading opportunities there, but this is telling you to get out early and avoid long positions. So we've been in short positioning most of the time since March 2021, and only recently it's broken to the upside in December 2022. Now again, it's hit this. Come up to this area, hit this key resistance area, but that's also a key diagonal trend line, descending trend line, and this key ascending trend line. So it's actually forming a bit of a wedge formation here in the coming days or even weeks. So that's where we are on a daily, predominantly, well, it's showing predominantly long, but just be mindful it's hit this minor resistance, and we may see a bit of a retrace to the downside, and I'll cover that in the next 4-hour and 1-hour time frames. On the 4-hour chart, again, I've put an Fibonacci extension here between this range, and you can see there that aligns with the 123% extension if it gets to that level. But the first level of resistance will be that 78% extension on that range. So again, you could have taken long positioning, and again, using any entry strategy, and one of the entry strategies we're showing here is the fractals. If it breaks above the fractals and it's in a long position on the CCI, that's where you would go long, and exiting based on your risk profile, whether it's a moving average or a monetary gain or a percentage gain. I'll leave that up to you. Now notice out here as well on a 4-hour chart, I've drawn this key diagonal ascending trend line and along these bottoms, and it's currently sitting on this bottom as we speak. Now let me just go to the 1-hour chart and see what it's done there. Okay, zooming into that spot first, you'll notice again that diagonal ascending trend line, and you can see there it's just bounced off that trend line as well in the last, it just changed to the new hour in the last 2 minutes, and it's also bouncing off that potentially. So probably wait for it. If you are trading this, I'd wait for it to break above that fractal before taking any long positions. And if you want to be really confident, more confident about going long, I'd wait for it to break this resistance area especially. But again, just be mindful, there is this high level of diagonal descending trend line, and then also this key resistance area. So they've got a bit of resistance coming up in the next few hours or even days. So that's where we are with that. And again, notice back here we had a descending bearish divergence on the CCI versus a bullish divergence on the price chart. So we always try to look out for divergence, and in this case the divergence played out well. It did actually fall back from there, and it's hit this key support area. So just always look out for divergence. If you see those, it's worth taking note of those. So again, overall we're still in a bullish momentum on all three time frames, but again, just be mindful, it's currently bounced off that in the last few minutes, it's bounced off that diagonal ascending trend line, and it's now heading towards this resistance area. But again, if it breaks below that trend line in the coming hours or even minutes, and then we'll obviously start considering short positions, especially if this starts breaking to the downside on the CCI 1500, but it's still in a nice uptrend. And even if it breaks down again, we may see it break down to the 38 or even 50%. If it drops much slower than the 61%, then we may see it start challenging this moving average on the CCI. There we are at the moment. So to understand how to properly trade using the average down approach, reference the links in the description below. Subscribe and like the channel if you really want to support us more. Support us on Patreon, links in the description below. Thanks, and see you in the next video.